Well, hello, hello, hello. Welcome to Money Talks with Ayanna Smith. Listen, have you ever wondered and wanted to get some details on what is the final expense buzz all about? We hear that and we hear so many commercials. We see different things played. We see different things coming to our houses in mailing form and all that good stuff, and people calling and all that. You said, what is this all about? Well, listen, we're going to have someone who's going to be able to dig in as we have a conversation about what is final expense insurance. And if you have any questions, make sure that you grab a pen, pencil, paper, whatever you need, your electronic device. And we will be right back to get some questions answered by our featured guest, Artemis, the agent. Well, we are back, and I hope that gave you enough time to get your pen, pencils, paper, electronic devices so that you could take some good notes and ask some questions as well. So make sure that you like, comment, share. If you're replaying, make sure you do hashtag replay. If you have a friend, call them in, share this video with them so that you all and they can get some answers. And also make sure that you like, comment, and share. Also, want to make sure that you join me, of course, on all social media outlets, wherever you're seeing this aired and broadcast, wherever you're listening to it. Make sure that you follow me on all of the social media outlets and subscribe to my YouTube channel, because my YouTube channel, I can be found at the Ayanna Smith on the YouTube channel. So you can go there, subscribe to my YouTube channel. Make sure that you are in queue with everything that's going on, all things Ayanna M. Smith, A.M. Smith and Company. And also, you can follow me on IG at Ask Ayanna _Financial Pro and my Facebook page at Ask for Ayanna. So, we're going to get right into it to talk and get some nuggets, some big old juicy nuggets about final expense insurance. You may say, what in the world? But you know what? We never have a downtime here on Money Talks, because remember, money is always talking, even if we aren't talking about it. So let's make sure that we talk about it. And as we're talking about it, let's bring our guest out of the virtual green room. This young man is no stranger to the stage of Money Talks, and he just doing big things. Of veteran, live, active, all that good stuff. Military man, a counselor. He's a good friend. He's a comedian sometimes, but he knows this stuff about life insurance, and he's in the life insurance industry and has been in it for some time now, and very well versed. So we're going to bring to the stage none other than Artemis Hurt, Artemis the agent Hurt. Yes, welcome, Artemis.
Hey, how's everyone doing this evening?
How are you? How are you?
I'm good. How about yourself, Ayanna?
I'm doing well.
That's
I'm doing
good.
well. Thank you for coming on and sharing some knowledge and nuggets with everyone. We just have a conversation. First of all, just give a little bit about yourself, just one or two lines. I kind of try to lead in, but it's nothing like it coming from you.
Okay. Again, my name is Artemis Hurd. You can also refer to me as Artemis the agent. I've been in the insurance industry for about a year and a half now. Okay. But I've always had my foot in the door with the industry.
Yeah.
It's been about 7 years, I believe.
Hmm.
Yeah, since I've had
Yeah.
my foot in the door with the industry, but actually involved with as an agent, of course, for 18 months now. So yeah, from a little town in Greenville, Mississippi, so yeah, from that little place, and now I'm sitting here in Chesapeake, Virginia, making life happen. Been serving in the military for 16 years now. I can't believe that. Been having fun with that too, and I've tapped into the financial services industry. Thank you, Ayanna, for introducing me to that. And yeah, we're making big things happen.
16 years in the military and you look like you're 16. How does that happen? All right. Okay. Well,
Look, I don't know about 16, but
but
I'll take it.
I love it. I love it. So tonight, we're going to get to a topic that I know that people really want to know about, and so just jump right in. What is final expense? What type of insurance is it, and what do people utilize it for? How is it most beneficial, and who is it most beneficial for?
Okay, so let's talk about it. I know a lot of our 50 plus club, 50 those that are 50 and over. You get a lot of stuff in the mail, probably actually before you turn 50,
Mm-hmm.
and about around like age 47, 48, you start seeing stuff coming, in the mail about final expense. What is this final expense that everyone is talking about? Okay. Well, I just want to let you know that is life insurance. Okay. That's all. It's really, that's all it
Mm-hmm.
is at the end of the day. It's life insurance, right? But don't click us off just yet. Okay. I'm gonna explain what type of life insurance it is, because what you have to understand about life insurance in general is just, it's not a, oh, just in case you die situation. Also, life insurance also have living benefits, or can come with living benefits depending on what product it is. Okay. And also, to put this out there, and this may be another topic, you may get something in the mail after you buy a house, maybe like a month or so, or whatever, and you're gonna get this thing that talks about mortgage protection, right?
Mm-hmm.
What is mortgage protection? Life insurance. Okay.
Mm-hmm.
But don't sell it short, right? Don't just throw it away or push it to the side, right? It's life insurance. Now, it's not the same as um, mortgage insurance. Mortgage insurance is to protect the lender. Mortgage protection protects your family, right?
Mm-hmm.
Just like final expense protects your family, right? It's life insurance. That's all it really is. But again, that mortgage protection or that final expense insurance that you hear about all the time is life insurance. And don't sell it short. Don't throw away the mail. Call somebody. Okay. So yeah, so final expense insurance, depending on your age and what company it is, it can range. Well, of course, it can range anywhere between $1,000 and up to $50,000, right?
Mhm.
Depending
And
on
that's
the
death
company.
benefit, right?
Yeah,
That's
exactly. And that's the death benefit, right? So, and final expense insurance, we find a lot of people in our industry, they don't qualify for the high level life insurance products from like IULs, maybe even term, right? Because there are just some stricter requirements for that product. But a lot of people ended up getting final expense insurance, which is a whole life product, right? It is really meant, as we like to say in so many terms, to get you in the ground or burn you up, and that's it. I hate to say it like that.
right.
Cremate. I'll say
Cremation,
cremate.
crematory services. Yes, yes,
Yeah.
yes.
But so yeah, she looking like, oh Lord, he said it like that. But yes,
We try. I would say this: we're not trying to make light, but at the same time, it's more of a burden when we don't
exactly.
have anything.
When we don't have anything,
Yes.
and we run across clients all the time. They say, well,
Mhm.
if I'm not gonna pay this much money for this, I'm like, well, sometimes it's all you qualify for, because you got to
Right.
understand health conditions. The older you get, the more you're prone to certain sicknesses and diseases like COPD and cancer and all these other things, other critical, chronic, and terminal illnesses, right? Congestive heart failure that takes out a lot of people, for to
Mhm.
qualify for those bigger amounts for term and those products, like those advanced market products like IULs, right? So you have the final expense side say, hey, uh, the insurance company say, we're not going to take a risk on you for $100,000, but we'll take a risk on you for 50.
Right.
We'll take a risk on you for 45 or 30 or 20 or
Mhm.
10, right? If you qualify, right? If you meet our underwriting requirements, we will cover you for that amount of money, right? Now, don't sell the final expense solution short, right? You can use that like any other life insurance product, right? If you get enough, you can say, okay, it's gonna take about 10 to bury me, and about 40 for my family to maybe sell my home, get it on the market, and even have a little bit left over for some income purposes, for income replacement in the next couple of months or even years, depending on how much money the deceased made, right? So
Mhm.
again, it's something better than nothing, right? It's better
Yeah,
than a GoFundMe account, right?
right.
It's better than selling chicken plates,
Yeah, and passing the
right?
hat around. It
It's
is.
better than having a fish fry, right? Unless we're coming together to celebrate the deceased, right? That's the only reason why we should be cooking is to celebrate, not to raise funds to bury someone, right?
Right.
And also with final expense, you may hear the term whole life insurance. That's
Mhm.
exactly what it is. It's whole life insurance. It's just labeled as final expense, right? And
Mhm.
the thing about whole life insurance, it's a big deal because it's the most popular type of coverage. Okay, if whole life is a plan that lasts your whole life. The cool thing about it is if you get approved for it, you won't have to worry about life insurance again, right? You'll be all taken care of. Now, the reason why it's so popular is because the way it works is kind of like a savings account. So any money you ever spend on the program is still your money. It grows with the cash value and earns a small interest rate. So 5 to 10 years from now, if you have an emergency and you need to tap into that account, you have that option to do so. So that money is not being thrown away. It's still your money, right?
Mhm. And that's a good thing. And also too, that whole life, like you said, it lasts your whole life, meaning it dispels the myth of, or is it going to end? Well, no, usually once people get it, it's going to take you on until you pass away. So that's the
Exactly.
great part about it. And that you can say, I can rest easy to know I have something in place, and not anything, just
Anything at all.
nothing, right?
Exactly, exactly. Again, it's permanent insurance, right?
Yeah.
So some of
So
the things that the final expense products come with is that it has tax-free growth. Okay,
mhm.
with that money that's growing in that account, tax-free, right? Again, protects the coverage of clients from the day of issue. Takes you all the way through your passing, right? Has living benefits attached to it. In some cases, may even have long-term care options. Okay. Again, provides protection and coverage in death or life. And last but not least, it does like any other life insurance policy. It leaves a love letter to your family.
Absolutely,
Yeah.
absolutely. It leaves a love letter, and also, some even, well, for most, I think most companies, once you issue that death benefit to the beneficiaries, it's issued with interest. Some companies
Hmm.
give interest on it, so it's like you don't come out with less. Because some people will ask
Right.
the question about, well, does the premium increase? Well, most of the time, we
No.
say we're at level. It's going to
Hmm.
be the same from the day that the agent talks to you. And one of us will share and say, Artemas said, listen, it's going to be $99.50. It's going to be $99.50 each time you put
Exactly.
your money away. And it's basically an investment into yourself.
Right.
You agree?
Exactly. And also find the expense. You don't have to be um 50 plus to get it. There are some
No.
companies that are like that offer 30-year-olds. I'm 35. I can get a fine expense product if I want to, from depending on what company it is, right?
Yep.
There, and then you have children's whole life policies, right?
Mm-hmm.
Exactly. That which can act like a final expense product. Small $10,000 policy probably run you, depending on the company, right? About what, $10 a month?
Maybe something about right.
Yeah,
Right. And this It just depends. And
Yeah.
so, we're not saying that an adult will get $10. So please don't think.
Yeah. Oh, no. Child, maybe a
A child,
10-year-old or something like that.
yeah,
Yeah.
a little girl or guy.
Yeah.
But that's why it's we a lot of times we're not I like to say we're not select quote, but that's why we like to talk about things personally. So we're just giving you
Right.
some tidbits and things tonight, and whenever you're watching, to listen and hit the replay, and then hit a schedule button so that you can talk to Artemis, or you can talk to me, but talk to Artemis and get those things in order, and then you'll find out what you qualify for. Because one thing we know is this, that we found life insurance is not a one size fits all, it's a one size fits you. So that's why it's giving
Right.
some options, sharing that there are some things that when people talk about if you qualify, you have to qualify because it determines by questions that are asked, and certain diseases and certain illnesses, critical, chronic, or terminal illnesses. Well, basically, our critical and chronic illnesses. We can offer what is there, and we have some great companies that will help cover people because
Yeah.
they want to help you to have something so that it can lessen that burden
Yeah.
with the situation already being as it is. So
Exactly. Yeah. And just keep in mind, like, a lot of people sometimes, we get in contact with people and they say, well, I don't qualify. Well, maybe they talked to someone a
mhm.
year and a half ago and they didn't qualify then. But like anything else in the world, life insurance is changing. It's not the
It
same
does.
as it was 10 years ago, right? 10
Mhm.
years ago, a company may not have taken a cancer, like if you had cancer ever. Now there's companies out there that are like, hey, if you've had cancer, but you've been good for over a year, cancer free for over a year, we'll take you, right?
Mhm. Yeah.
Because when you look at the people's health now, people are living longer,
Yeah.
right? Some companies are even changing their age requirements. Like I know one company, they changed the game. They went from 80 to 85. What I'm saying? With one of their
Mhm.
products, right? That'll cover people, So again, don't just sell yourself short and say, I don't qualify. Well, for one, I
Mhm.
like to say this: you're not a life insurance agent, most likely, saying that.
And
So
if you talk to somebody,
yeah, you
talk to
may
somebody else.
exactly talk to
Mhm.
someone else because there are
Mhm.
so many options. Because
Mhm.
life insurance agents, most of us are not captive anymore. Most of us are like some people like we refer to ourselves as independent contractors.
Right.
You know
And
what
then
I'm saying?
you have a lot of people that you
Yeah,
can work with.
exactly. So we
Mhm.
we act as brokers, and what brokers do is we shop around. So I'm glad to be a broker. You know what I'm saying? We're able to shop around for our people. So yeah, and that way we can close that gap of you not having anything at all.
Mhm. Yes, and I love it because sometimes people they just kind of like at the end of it, they don't know what to do. But we're finding out, hey, there's something we can pretty much find something for just about everybody. And
Right.
and I've seen things expand since being in the industry, wow, for a good little while now.
Mhm.
So,
Yeah.
and I've seen it expand, and I'm excited about it because no one should go around. There was this snack company, not trying to put the name of it, but it was a slogan said, "Don't go around hungry. Let's don't go around without being covered." And being
Exactly.
covered with some
Exactly.
life insurance, with some love insurance, so
Yeah.
that your family and you can have a peace of mind. Because it's not if or when we will need that, because we're not going to not need it.
Yeah.
but
Exactly.
but it lessens the blow, and it
Yeah.
helps along with the grief when we have something in place. So
Right.
we should just
Exactly.
automatically do that. Well, let's see what else. What else do you have for us? Do we have any more juicy nuggets that?
Well, I mean, so I remember I had my first death claim earlier this year.
Wow.
And the thing about the death claim was I had just covered the client a month prior, right?
Wow.
So it really, uh, as I've been in the life insurance industry or whatever, um, and it's one thing to cover families and say, yes, I hit my goal of getting this family covered and got them in the right thing. You pray you got them in the right policy. And
Mm-hmm.
then next thing you know, something happens and now they're gone. And so it's another thing to have a death claim come in your email saying that one of your dear clients just passed away. So again, we know not the day nor the hour, right? So life insurance is a part of getting your house in order, okay? Because life insurance comes into play with your will, with your trust, anything else that you have set up with your estate, right? It ties into your estate, right?
Mm-hmm.
Some people, I really don't believe in self-insurance. You ever hear people say, "Oh, I'm self-insured"? I said, well, my thing is, okay, if you have, let's just say, if you have get $1 million policy and add to your, you know what I'm saying? Add to your estate. There's nothing
Mm-hmm.
wrong with having something extra, right? To give someone else that risk. So, even the millionaires a lot of millionaires have life insurance still too. So
Right.
if you are a thousandaire, you most definitely
Right, because you
should
said
have a life insurance policy.
absolutely
Uh,
self-assured. That's fine, but even like you said, even the wealthy know that is a part of their portfolio. Even if they have, they're doing stocks, IRAs, they're doing savings accounts,
right.
they're doing, electronic currencies, all of that. But they
Real
will
estate
still
investment.
real
Real
right
estate
real
investing,
estate
yeah.
investing, all of that. But they will say, but I still have my life insurance policies, that whether it be whole life, whether it be index universal life policies, sometimes even term policies, because they wanted to do a certain thing and what you say, indemnify, put people back where they were before they ever lost anything,
Hmm.
before anybody ever passed away. And they take that as, okay, if I can get a lump sum of money, if I leave that, I know that that people that I am leaving can then, they've already trained them on how to then invest
Hmm.
that money and make more money, and they didn't have to put in as much over time. Because the thing is, you cannot outbuy insurance. You can't outpay it. It's
Okay.
like you really cannot pay the benefit of it. And so going back to really quickly with your death claim, and when the family had, what do you, how did the family, or how were they positioned, or I guess you say, how did that, knowing that their loved one, they lost their loved one, but then they knew a death claim was coming, how did they respond? Do you was it more of some relief or appreciation that their, even though their loved one was gone, that they had left something, or that they put something in place? What was the positioning in that, as opposed to people we know that don't have anything?
I think it gave them room to properly grieve.
Mm.
A lot of times in our community, we don't get a chance when loved ones pass on. We don't get a chance to properly grieve because we're stressing on how to bury. You know what I'm saying? Unless we got some rich uncle or rich auntie or something that can just, hey, here, say here's the money. Most of
Yeah,
us don't have that, but
yeah,
I believe they were able to properly grieve. Now she had other things in place too, like she had a 401k, and she had some other stuff too, but
mm-hmm.
just that life insurance policy, she was setting her family up for success. And
Right,
unfortunately, she passed away, probably before she wanted to do some other things, you know what I'm
right.
saying, with her estate. But I just feel like that, they were able to properly grieve knowing that she had life insurance and they didn't have to sell chicken plates or throw a fish fry to
Yeah,
raise money for her burial.
it was like that. She gave him a cushion.
Yeah,
She
exactly.
gave
Yeah.
him a cushion, and that was good. She had some other things in place, but but you give people a cushion, like you say, you give them
Yeah.
something, an ability to grieve and
To
have a,
grieve. Yeah.
yeah, let the tears flow a little bit, and know that you don't have to let them sit out, or whatever. You can get your services going on. Yeah.
Yeah, and the other thing in place, besides the 401k, it just came back to me. was insurance on her job. So
Mm-hmm.
she was working, right?
Mm-hmm.
She was in her early 50s, you know. And
Mm-hmm.
so she was, again, that's, you know, you get around that age where 40, 50 something, you should be preparing for retirement, which means getting life insurance outside of what you have on your job, looking
Yeah.
into your 401k account, seeing that you have enough money in there to, you know, do whatever, you know what I'm saying, or to properly retire, you know,
Mm-hmm.
or maybe taking some of that money and rolling it into to something with more of a safe growth strategy, right? But again, she was lining herself up, and unfortunately, you know, she passed away
Mm-hmm.
earlier this year. So, um, and that's going to lead me into some myth busters that I have.
Mm-hmm.
While we got a few minutes here.
Yeah.
So myth number one: life insurance is only useful after my death. Um, Listen, life insurance is a risk management tool. Okay, it's a transfer of risk. Risk must not be associated with dying, but also living too long. Like we said earlier, people are living longer lives,
Mm-hmm.
right? People living longer lives, so you want to get some coverage, um, no matter what the age is, right? Myth number two: my employer covers me, so I don't need another policy. Your employer only covers you till you are employed with the company, right? The policy gets terminated once you leave or retire. Okay, it goes away. It is advisable to supplement your provided coverage with another insurance policy that is customized to your future needs. Now, also with that, I like to add that you're working with this company, say you're 30 years old, you spend 30 years with them, you retire from that company at age 60, they no longer cover your life insurance policy. I run these type of clients all the time. Now at age 60, now life insurance is too expensive because now they're on a fixed income, right? Well, if you had got that policy when you was 30 years old, you will still probably paying that $30 a month. Don't
Mm-hmm.
quote me on that, but that's
There
how
about.
low, yeah, that's how low that policy would have been at age 30, right? And if you keep up with it, right, over the course of years, again, that small policy, that small finance expense policy that you got outside of your job has a built-in savings account. Okay, so you can kind of look at it as a savings strategy as well, right? And also, myth number three: I'm young, single, and healthy. I don't need life insurance. Yes, you do.
Yes,
Okay.
y'all do.
I'm 35 years old as we're making this video, and Ayanna helped me get my first life insurance policy outside of my job when I was 28, right?
Mm-hmm.
Yeah, and it's Index Universal Life. I got that outside of what I have with the military, right? Because I wanted some sort of stock options, right, without taking too much risk. And IUL is definitely the way to go with that, right? Get it while you're young and healthy. Again, right?
Mm-hmm.
So if you know you have your family has history of high blood pressure, diabetes, kidney disease, COPD, all these things that could make your insurance costs go higher, get it in addition to what you have on your job to supplement that, right? And that's all I have, Ayanna.
Oh wow, okay. You see, you got the myth busters out there. So
Yeah,
hey, we dispel some myths and we want to take some action.
yeah.
So tell everybody how they can get in contact with you on social media and all that.
Okay, social media. I'm on Facebook as Artemas Hurt, right? I'm easy to find. You will see my face on there. Okay, I use my own profile pic. Okay, on there. You can also find me on Instagram at underscore Artemis. Okay. I also have an additional Facebook page, a like page, which is called Artemis the Agent. You can find me there as well. Yeah, and that's how you can get in contact with me. Send me an inbox. Okay, if you have any questions, whether you buying a policy from me or not. Okay, if you want me to answer some questions, I definitely help you out. But I would love to help you and your family.
Absolutely.
Absolutely.
I love it. I love it. Well, you have heard it here. You got some details on what final expense insurance is and is not, and also some myth busters to help us to move on and make some better decisions and choices. So, Artemis, we absolutely thank you for coming on Money Talks with Ayanna Smith. We are so excited to have you once again. And of course, you'll return at some future date. I am most certain. And but right now, we're going to bid you say great wishes and keep helping the people. And thank you for dropping by.
Thank you for having me.
Absolutely. So this has been another episode with Money Talks with Ayanna Smith. And remember to like, comment, share, subscribe to my YouTube channel. Make sure that you also follow me on Instagram and my Facebook page and all that. And we are going to wrap up. But don't forget that money is always talking, even if we aren't talking about it. So we want to make sure that we have the conversations so that we can get what we need and get to where we need to be. Have a great one.